Howdy everyone, Greg Martin, the Entrepreneur's Banker here. And this week we are going to talk about something that I know that has been on a lot of the minds of the entrepreneurs that I serve. And that's specifically the SBA Disaster Relief Program. But before we get into that, I want to say thank you. Thank you to you entrepreneurs who are out there that are continuing to show grit and determination, to continue to show why it is that you stand the test of time and a lot of other entrepreneurs don't. The grit and the determination that you have just displayed by the fact that you are still in business is so amazing. And I want to encourage you. I want you to hear loud and clear that I am very proud of you and that you should be very proud of yourself. Being an entrepreneur is difficult in the best of times. When we have an unprecedented potential quarantine or self-distancing mandate that is potentially is going to be coming down, that's something you never could have thought of or never could have planned for. But I want to encourage you. I want to encourage you to continue to show that grit and that leadership to your team, because how you've run your business 2 weeks ago, heck, how you ran your business 2 days ago is different than how you're going to run your business 2 days from now. So I want you to continue to be strong, and I want you to continue to show the strength and to reach down deep inside you and the creativity to reach down deep inside you and to continue to push your business forward. How you define success for 2020 is probably different than how you would have defined success for your business on January 2nd of this year. But I want you to continue to move forward. And we're going to talk today about the SBA Disaster Relief Program. This is a loan that is administered directly by the SBA. We're going to talk a little bit about the overall program, what it's used for, some basic structures, and then some information that you need. But before we dive into that, I want to strongly encourage you entrepreneurs to kind of take a step back and really only take on any type of debt in this time that is absolutely super critical. And I know that may sound really, really strange, especially when you're like, Greg, my customers are completely gone. I've got zero income coming in. And if I don't have some type of loan or some type of bridge, then I'm not going to be in business in 2 months, 3 months, whenever we're through this. But I want, and I completely understand that. But I want you to use that creativity that you have that is deep inside every single entrepreneur that I work with, to be able to shift and pivot and focus and create things that your business has not been like before. That's one of the things I love about working with entrepreneurs. Think back when you first started your business and you didn't have $5,000 a month in order to spend on advertising or Google AdWords or a marketing budget or whatever. You guys got creative by building your brand out there and communicating the value, talking to the people. That's what I'm asking you to do now. And I know that it's not easy, but heck, being an entrepreneur is not easy. So I want to just strongly encourage you that as you go through this, do not treat these loans as their financial triage. Don't put a Band-Aid over something that really needs surgery. And that's the second thing I want to say, is that use this opportunity and use this time to work on your business, not just in your business. And I'll talk a little bit more about that in another video. But as I said, let's talk about the overview of what the SBA Disaster Relief Program is, kind of talk about some of the basic structures, and then some of the information that you need. Now, a lot of this information continues to go out. It continues to be put out. And so I may have errors in this video. And I want to be completely upfront and honest. I am not the 1,000% expert on this. The SBA.gov is the 1,000% expert. But I'm using all of my years of experience in banking and dealing and doing SBA loans and just talking with a lot of good, knowledgeable people in the industry to give you this information. This weekend, I actually went online and I applied for an SBA disaster relief loan. Not that I have a business. Well, actually, I got all the way up to hit submission and then I didn't. But I did that because I wanted to understand exactly what you, the entrepreneur, is going to be asked to do. And I wanted to provide a little bit of insider information and to be able to prepare you so that you can have some information. I'll tell you right off the bat what you have to walk through It is not a 100% complete process. But first off, let's talk about what these loans are. So these loans are disaster relief loans that are administered directly by the SBA. Now, typically, in non-disaster times, the SBA partners with banks. And the bank provides their cash, their capital, and in return, the SBA provides a loss guarantee. That's anywhere from 50 to 90% of that. So if the bank lends an entrepreneur money, and then for whatever, they have an SBA guarantee, for whatever reason, if the SBA or if the business does not make it, cannot pay it back, if there is a loss, the SBA will actually step in and pay the bank some of that loss, a percentage of that loss. In the SBA disaster relief loans, these loans are administered directly by the SBA. That means that they're analyzed, or to use a bank nerd term, they're underwritten by the SBA, they're approved by the SBA, they're dispersed by the SBA, they're documented by the SBA. So banks do not have any portion in this plan. Now, there are some programs that have been proposed through some of the legislation that actually will bolster the SBA's the SBA plan to partner with banks, and we'll talk about those in another video. But right now, let's kind of talk about the disaster relief loans. So these loans are up to $2 million, and is up to $2 million per tax ID number. There are some businesses that are eligible, some businesses that are not eligible. First off, before we go into that, let's talk about what they can be used for. These are specifically for working capital loans to help businesses who no longer have revenue because of the coronavirus disaster. They no longer have revenue, so they don't have anything coming in, so they can't make the payroll, they can't pay their utilities, they can't pay their suppliers, they can't pay their rent, they can't pay their business loans, they can't pay their insurance bills. All of that is working capital. So these loans are working capital loans. They are not debt refinance loans. So you can't go and apply for a $2 million SBA disaster relief loan and refinance your business mortgage. So what this is specifically helps with your working capital. And so the SBA has a mechanism to be able to kind of understand what your working capital needs are, and we'll talk through that. So I talked about all those things that apply for working capital. You paying your rent, paying your employees, paying your utilities, paying your business, your other business loans. And so all of these things are applicable to be able to help from a debt service standpoint. You can take, like I said, it can be up to $2 million per entity. It can be, it is 12 months interest only, and then followed by a 10 all the way to a 30-year repayment plan, depending on the strength of the business, depending on the ability of the business to repay. The interest rates right now are, I'm being told, are going to be fixed at 3.75 for the life of the loan. And so even during that 12 months interest only, it's fixed. And even when you're going and you're paying it back on principal and interest, it's going to be fixed. So that's really, really good. There are no fees that are associated with this. So to be able to have this shot in the arm, shot of working capital, is really, really important. Now, as I said, these are administered directly by the SBA. And as you're going through this, and as they're underwriting all this, you can imagine that, especially across the entire nation, you've got a lot of entrepreneurs that are applying for these loans. So one of the big downsides you need to be aware of is that this can take a lot of time. I don't have any idea of really how long it can take. As a point of reference, during Katrina, when entrepreneurs went in and they had this type of deal, these loans took up to 5 months in order to be administered, approved, and then actually dispersed. So you're going to have to be walking through, you're going to have to be talking about a lot of these things with your employees, with your landlords, with your bank, to be able to say, look, I'm applying for this stuff, but I'm going to need some time, and we're all going to need to work together because this is extremely unprecedented times. So like I said, these are administered completely by the SBA. I don't know how the documentation is going to be needed or how the actual disbursements. I don't know if it is like a construction loan where you provide some documentation and then they fund either your bank directly, and then you can make the bills, or they may even pay your landlord themselves, or pay the bank themselves, or pay the utilities themselves. They may pay your employees themselves. I really don't know how that's done, but I will say, just dealing with the SBA in the past and working with them, it is going to be documentation heavy. So be prepared as you're going through this entire process to be able to have everything that is have everything documented, have the ability to have everything electronically, because obviously in today's environment, being able to go to the mail's post office and drop it off and then wait for a couple days to be sent and then wait for it to kind of be worked through, that's going to be a huge amount of time for you to take. So we talked a little bit about what these businesses are. Like I said, it can be up to $2 million. If it's $350,000 or less, I think the SBA, while you can apply for the disaster relief loans, but there are other SBA loan products that are coming out. And again, we'll talk about that in a different video. But if it's more than $350,000, then it will require a blanket lien. Actually, I think with everything, it'll probably require a blanket lien on the business assets. That's the equipment, inventory, accounts receivable, and probably the intangibles of the business. So if you have a business that has got some proprietary information or some software or some proprietary processes or patents or something like that, all of that are assets of your business. And so the SBA will most likely require that you have a blanket lien that's put on those. Again, I'm not speaking 100% gospel. I'm just telling you what my experience is. Also, if you have ownership in any type of real estate, whether that be your primary residence, your home, rental properties, commercial property, land, ranch land, whatever, if you've got more than, I believe, is 20% equity in that real estate, then that real estate is going to have to be pledged. Now, there's a couple exceptions to this, and you need to work with your SBA loan officer to be able to get specific clarification. But I know that in the state of Texas, there's something that's called the Homestead Act. And the SBA cannot attach a lien to your primary residence in the state of Texas, even if you own it free and clear. Also, if that real estate is owned by another business, not the business that's requesting the loan, but another business, then that real estate, I believe, is excluded. So there's ways that kind of work through and understand what it is. But if you've got 4 or 5 or 1 rental property in your personal name or in the name of your business, then you're going to have to pledge that. And this is not something like with a bank where you can kind of negotiate and kind of go back and forth and say, okay, well, what if I get less of a loan? Can I not pledge that asset? It's the way that it is, and if you want the money, then you're gonna abide by the SBA's rules. Another thing I want to talk about is guarantors. So typically on most bank loans, banks require a guarantor of someone that has 20% equity ownership in the business or more, or if they're super critical to the business, like a key employee, even if they have 0 or maybe even a small amount of ownership. Well, the same thing is going to apply for the SBA. So if let's say that you're in a partnership and your partner has 51% of the ownership and you have 49% of the ownership, you want to go ahead and you want to apply for this loan, but that partner does not want to put their name, they don't want to provide a personal guarantee, well, then it's going to be ineligible for the SBA. So what if it is owned by a trust or it's owned by another business or something like that? So again, if it is owned more than 20%, or there's something that's like super critical, a key person, a key employee, you're gonna have to walk through that and they're gonna have to provide their guarantee. That means that, let's say that you've got a partnership and the partnership is owned by 2 other businesses and each one of those businesses are owned by a husband and wife. So the borrower would be the operating company, then the 2 companies that own the company would also provide a business guarantee, and then the 2 owners of each one of those partners would also provide. It's going to drill down to the individual level. And this may get very, very tricky if you have a family trust, or there's some type of trust or a partnership, or maybe there's a percentage of private equity that owns the company. But no matter how it is, you just have to kind of walk through some of those things. Now, there are a couple, let's talk about industries that are there and industries that can't be. And this is where I've seen a little bit of discrepancy in different presentations for the disaster relief program. And this is unprecedented in my years of banking. The SBA is actually allowing nonprofits to apply for the disaster relief loan, and the nonprofit interest rate is actually 2.75 compared to the 3.75. But of course, there are some specific requirements that we're going to have to talk through with that. But if you have a company that is primarily from the leasing of real estate, specifically if you've got like a multifamily property or something like that, or a rental portfolio, I don't believe that those types of properties are considered eligible, or those types of businesses are considered eligible from the SBA. And this is my experience with the SBA in the past. Those types of properties are considered passive income type companies, and therefore they do not qualify. Now, if you have a self-storage unit, a self-storage facility, and I know that sounds kind of tricky, that does apply, but a multifamily commercial, a multifamily student housing unit would not apply. And I'm not here to make the rules. I'm just here to tell you that, to the best of my knowledge, here's what we've got, here's what's going on. If you have an adult themed business or a pawn shop, I do not believe that those are eligible. If you have to do anything with gambling and you receive income from gambling, you have to be, I don't believe that those are eligible. Again, don't take my word as gospel. Work with your SBA loan officer to be able to kind of find out which one of, if your company does apply, it can apply for the loans or not. One thing I will say is that a lot of times I have worked with some gas stations and convenience stores, and they may have like some video poker machines or something like that that's in their business. That's something you're going to have to kind of work through, because you've got a little bit of your revenue technically from gambling. But maybe you see that more as, I'm just renting the space out. I'm not really part of it. Again, talk to the SBA loan officer, work through to make sure that you have those open and honest discussions up front. Okay, so let's talk about the SBA program and so what actually it takes to apply. So you need to go to sba.gov/disaster, and then you'll be able to see all the information of how to apply. And it's very easy to click on the links. As of Friday, 100% of the United States was declared a national disaster relief area for the coronavirus. And so therefore everything had been opened up. In Texas, it had taken until Friday, and I know that was a very frustrating time for a lot of entrepreneurs just wanting to get out there and wanting to apply. Like I said, when I applied yesterday, it was on Saturday, there was a lot of people that was online, so the process was a little bit slower just because it took a while for the pages to load up. So if you go through this process, maybe have all this information ready, it really will help. And maybe so when you apply on a non-peak time, that would be you'd be a little bit faster. Okay, so let's talk through the forms that you're going to have to go through. I will have lists of these forms in the slide at the end where you can go, where you can find them. All of these forms, for the most part, actually were part of the application process. When I first started, I thought that you would have to download these forms, fill them all out, and then have them ready to be electronically submitted. That's really not the case. There's only 1 or 2 forms that you actually have to physically upload to it. The first one is the actual application. It's the SBA Form 5, or if you're a sole proprietorship, the SBA Form 5C. Now, let me just, before I go any further, let me just say my 2 cents. Nature abhors a vacuum, and bureaucrats abhor empty spaces. So as you're going through and you're filling out these forms, make sure that you're filling out every single space, even if it's not applicable, put NA or not applicable. That way, the person that's looking through your information knows that you've actually sat there, read the question, understood and comprehend the question, and then answered appropriately, not just skipped over it. Because if you skip over it, then they're going to be just going back and forth asking questions that they don't have to ask you, and you're just wasting time as you're going through the process. So the SBA Form 5 or 5C, if you're a sole proprietorship, this is the application. Is pretty self-explanatory. They're just going to talk about you, your business. Obviously, you need to know the pertinent information: when your business was formed, your tax ID number, your mailing address, the actual legal name of the business, the doing business as, etc. A couple of things that you may need to make sure that you've got on hand is that you have the insurance information, like your policy number, your address to your agent, contact information is like that for all your different types of insurance, whether that be hazard insurance, property insurance, an umbrella insurance, workman's comp insurance, stuff like that. That's one thing. Again, I hope that as you listen to this and you kind of understand, okay, here's some things that I need to be prepared to talk through. You're going to need to talk about the estimated asset value within your business. Make sure that this ties back to your balance sheet, to your financials. Make sure that you've got a business debt schedule, and again, this also is on your balance sheet. Again, you've got your assets and you've got your liabilities. And as you're listing out your liabilities on your balance sheet, make sure that you have those present and be able to talk through that. And then talk about, okay, how's this secured? What are the monthly payments? What are the terms? Stuff like that. The next form is the SBA, it's the IRS Form 4506T, or this is the transcript request that you will actually fill out throughout the process. And this is one of the forms that you actually will put all the information in, and then it will generate a PDF version of this, and you have to print out the version, you have to sign, and then you have to actually upload it back up. Or if you don't have the capability of that, there is a way that you can print it out, sign it, and then mail it. However, be aware that just like with everything else, that this process to actually look at your information and your loan will not begin until they have every bit of information. So if you are mailing that in, make sure that you are baking that into your timeline. The IRS 4506T form has got a couple different things, a couple different reasons. One, they're going to go to the IRS and they're going to say, okay, give us copies of the information that was submitted by this entrepreneur. And then they're going to compare that with the information that you're actually going to upload, and you're going to send them your tax returns. And they better match. I mean, obviously, unfortunately, there are people out there that say one thing to the IRS, to the tax return, and then they've got a separate set of tax returns that maybe they think they can use that maybe shows a little bit more profitability in the business. And so the SBA just wants to make sure that what you told Uncle Sam is the same thing that you're telling them. These things need to be filled out for the individual and for every owner that has 20% or more ownership in the business. Again, that could be individuals, that could be trusts, that could be other businesses. But if you've got 20% or more ownership in this business that's applying for the loan, you're going to have to provide a 4506-T. All right, one thing that I strongly recommend, and this is kind of just I'm going to go off on a little bit of a tangent, is that most people today electronically submit their tax forms. If you do not do this, then I would strongly suggest that you consider doing this going forward. I once had a client that got just a standard SBA loan, and when the bank and the SBA department requested the 4506T, the tax transcript, we were told, sorry, they never filed. And what the client had actually done is that the client had actually sent in a paper copy with a check of the taxes that they owned. They sent that to the IRS. Well, someone in the IRS mailroom opened it up, took the check, cashed the check, but then never processed the paperwork. Well, long story short, we had to get the congressman involved, and they were able to amazingly find the tax transcript, and we were able to move on. But that actually delayed closing for that business by about 3 weeks. So just a side note, if you do not file your forms electronically, seriously think about doing that. Overall, this is pretty straightforward. You're going to have to, as you kind of go through, you'll click, is this for a corporation, an LLC? Is this for an individual? And then the actual application through the website will, like I said, will actually print out this for you. Next thing that you're going to be asked to submit is going to be your tax transcripts. And I think that it only asks for 1 year, but realistically, I think that it would be really smart for you to have 2 or 3 years worth of your tax returns. Again, this is for the business and any owner that has 20% or more ownership in the business. It's just the way it is. I mean, I know that's a recurring theme, but just have it already. Have it all electronically saved, have it organized so that you can access it very, very quickly. I think that if you have filed your 2019 taxes already, obviously that's going to be the most recent year that they look for, but have the couple previous years. If you haven't filed your 2019 taxes, if they're on extension, then have a copy of that extension paperwork, and then you need to have a QuickBooks or a company prepared balance sheet and profit and loss as of 12/31/2019. Now, if you have to do this, I would also recommend that you have saved a 12/31/2018 balance sheet and profit and loss. This does a couple things for the SBA underwriter as they're looking at it. What they're really going to do, one, it shows consistency in how well you do your record keeping, because they're going to look at your 2018 tax return and they're going to look at your 2018 company prepared statements, and they're going to say, okay, are they somewhat similar? Now, your accountant may add certain things like depreciation, or may not count all of the meals and entertainment, stuff like that. It doesn't have to be dollar for dollar exact, but it has to be able to kind of understand and be consistent. For example, if your 2018 profit and loss shows that you made $500,000, and then your tax return shows that you lost $500,000, unless there's something like an accounting add back, like depreciation or amortization or something like that, that maybe not being shown in your company prepared, then that's going to kind of throw up a lot of red flags, and they're going to say, okay, well, here was your 2018, and it is vastly different than your 2018 tax return. So how do I know that your 2019 is actually the actual number? That's just kind of as you're walking through. Make sure that you're answering, or you're able to answer those questions. Far too many times I deal with entrepreneurs and I ask them those type of questions, and I get very detailed. I go line by line and I say, here's kind of where it is, and I'm pretty good at it and I can figure it out. But sometimes I've got questions and I don't particularly like it when an entrepreneur says, I don't know, ask my accountant. And while I completely understand that, because the entrepreneur doesn't focus on that type of stuff all the time, and the accountant is their expert, they want to direct me to the accountant, but those are your numbers. That is your responsibility to know that. A couple other things that to have when you have in your tax return is to have your K1s, and that's if you have ownership in other businesses. If you have ownership, if you have 20% or more ownership in other businesses, then be prepared to also submit those tax returns. Again, it's a huge paper trail, and the SBA is just trying to figure out where's all your income, where's all the expenses, what is the ability to repay debt, what is your actual need. As you kind of go through that, you may also want to go ahead and have prepared a year-to-date 2020 balance sheet and income statement. And as you're going through the process, be prepared to have that updated, because the SBA says that any income statement and balance sheet that is greater than 98 days old is stale. So you may be going, if this takes 4 or 5 months to go through the process, you may be asked to update that a couple times. Just be aware of it, just be part of it, and make sure that you've got a plan in place to kind of go through that. The next thing that you're going to be asked to do to fill out is the SBA Form 2202, and that is your debt schedule. That's basically when you look at the balance sheet of your company and you list all the liabilities that are on your balance sheet. Those are the loans that you have, the leases that you have, maybe some credit cards, all of that. It's just kind of is saying, okay, tell me, what are the loans or the leases? What type is this? A loan? Is this a lease? Is this a line of credit? Is this a credit card? Is this a shareholder note? Whatever it is. And then just kind of talk through, okay, what is the interest rate on that? What was the original balance? When did it start? What's the current balance? That really should kind of tie back to the balance sheet that you've got. What are your monthly payments that you have to have? Does it mature? Is the interest rate fixed? Is the interest rate variable? These are all information that kind of talk through. So as your business has debts, okay, what does it have to pay each month? If there are a lot of entrepreneurs that I work with, they go out and maybe they get a vehicle or they get some type of loan, and they have the loan in their personal name. They went and got the vehicle in the personal name because maybe the financing terms were better in their personal name, but they also have it on the balance sheet of their business. If this is the case, make sure that you identify that and that you're very, very clear that the business makes these payments. Because if you don't, then when the underwriter is going to look at your business and then look at all the owners of the business, and it sees this truck loan here and this truck loan over here, they may not necessarily connect that those are the same exact thing, and then you're getting double dinged for that expense. So just be very, very clear on how you do that. The next thing that they talked about is the SBA Form 413. It is your personal financial statement. And a lot of times, again, as you're going through the process, you're going to fill this out online. If you have a business personal financial statement from your bank, if you've gotten a loan, typically banks require this as well. And so a lot of the information is going to be on there. Again, this is your personal balance sheet. This is not your business's. This is your personal balance sheet. What are the assets that you have? What are the liabilities that you have? So if you have personal bank accounts, here's where you put that information. You don't put the business bank accounts here because that's on the business's balance sheet. If you have a personal mortgage, this is where you put that information. You don't put your commercial mortgage. Again, that commercial mortgage is on your business's balance sheet. It talks about contingent liabilities. And this is a bank nerd term that basically says, have you co-signed for anything? Maybe one of your kids has student loan debt out there and you've co-signed for that. It's not in your name, but if the debt goes bad, whoever issued that debt is going to come to you to be able to have payment. You're going to go ahead and maybe you co-sign for a car for your brother, your sister, your whoever, a friend. But the fact of the matter is that that debt is not in your name, but that is the debt that is that you are liable to pay if the person who took the money out can't pay. Another thing is if you have an SBA IRS payment plan, and I know that this happens all the time. Entrepreneurs go through and for whatever reason they don't have the cash on hand in order to pay your taxes. Let's talk about profit first later. But the fact of the matter is sometimes happens. If this is the case, make sure that you have documentation of all your payments and that you are current on that. If you are not current on the IRS payment plan, then you're probably going to get disqualified from the SBA disaster relief loan. I'm not saying, again, that I know that to be 100% true, but from their perspective, they're like, look, the IRS can throw you in jail. The SBA can't. The IRS can throw you in jail and you're stiffing them. Why should we give you money in order to just have you stiff us? So if you're in that process, let's kind of talk. If you're in that situation, let's talk through it. But make sure that you've got documentation. Again, then this is a bureaucratic system, people. You need to understand that the SBA is going to actually go through and require this. So make sure that you've got all the documentation proving that you're current on that. Make sure that you've got the information ready for your mortgage lien holder information. A lot of this, and you don't typically have to fill out on a lot of bank personal financial statements, but they're going to ask for like the address and the phone number and your loan number, all that stuff as you're going through, specifically for any real estate loans, but also as you're going through and talking through some of the personal loans, your auto loans, your credit cards, stuff like that. Just be prepared to have that information. Again, nature abhors a vacuum, and a bureaucrat abhors a blank that is not filled in. So kind of work through that. The last thing that I want to talk about for the personal financial statement is the area that talks about other assets. Now, we talked about contingent liabilities. That's kind of like your other liabilities, but your other assets. And a lot of entrepreneurs, even when they fill out the bank form that I give them, they question this. Well, this is like your jewelry, your guns, your antique, your rugs, things that are not listed there. The value of your business. You have shares in your business, and those shares have value. Now, how you come up with those values is very, very subjective, and most of the time, specifically for the values of your business or values of closely held corporations, that's the bank term for your business equity. Those are kind of taken out when they're looking at the net worth of the individual, just because the value is very subjective. What I tell clients is to say, okay, if someone were to come up with a checkbook and say, okay, I'll keep writing zeros until you tell me to stop. I want to buy your business. What's that value that you have? And that's kind of what you can put down here. Obviously, you may think that your business is worth $100 million, but an external buyer may kind of come in and do their own evaluation and say, you know what, it's only worth $1 million. So let's kind of work through this. The last form that I want to talk about, this form actually was not part of the application process online, but I know that you're going to need it. And how do I know this is because I actually got my hands on an SBA PowerPoint presentation that they had given out to some of the different banks and just some of the different institutions. I'll go ahead and I will post that as well, a copy of that presentation that's public information, so it's not anything specific, and actually kind of walks through some of the stuff. But it's the SBA form 1368, and this actually blew my mind when I actually dug into this. And so what you have to do is this form provides the sales figures, and if you don't know the exact amount, but you can estimate, but it provides the sales figures on a monthly basis for the 3 years before the crisis. Think about that for a second. So you're going to have to go back. If all you have is your tax returns and you don't have monthly profit and losses, or hopefully you've got QuickBooks or your accountant has QuickBooks that you can go in and you can run that report, because most businesses, very, 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 I can't even think of a single business that I've worked with that has 1/12 of their income every single month consistently, year after year after year. A lot of businesses, they have pretty consistent revenues, and then maybe they've got a spike, and then that's really during their busy time. Other times, entrepreneurs have businesses that have really, really highs and then really, really lows from a revenue standpoint. And again, this is revenue. This is not talk about actual income, but this is revenue. So be prepared to actually go back and to say, okay, well, during this time, this type of year, this is the types of revenues that I have. Now, I believe, and this is complete conjecture on Greg's part, because again, I don't know this process, but I believe that this is going to be one of the biggest tools that they use in order to determine how much of a disaster relief loan that you're going to get. Again, what's the purpose of the disaster relief loan? The purpose is to replace the revenue that you've lost because of this disaster. And so that has nothing to do with your expenses during that time, but the revenue. And so they're going to ask for documentation to prove, okay, if it is April, May, June, July, August, September, and maybe your business has very, very minimal income during that time, And in October, November, December is when you make 98% of your revenue. Well, then they're going to size the loan accordingly for whatever that time is. On the flip side, maybe April, May, June, July is your busy time, and that's the time that you make 80% of your revenue. Well, then that's where you're going to come and be like, look, it doesn't make sense for me to get the bare minimum or just what it takes for me to cover my expenses during those months. If I don't make that revenue during that time, then I'm dead the rest of the year, because I take the profit and I set it aside, and that's what I live off of for the rest of the year. So again, that's the SBA form 1368. That is not part of the application process, but it is something that you actually have to go through and fill out. So get with your accountant, get with your QuickBooks guru, and dig in and be able to have that. I know I went through a whole lot, and this video is a lot longer than I anticipated. Thank you so much for sticking with me. And I know that there's probably a lot of questions. Please reach out to me. Go to theentrepreneursbanker.com and you can contact me there. Or if you go to my LinkedIn website, Greg Martin, I am in Bryan College Station. I'd love to connect with you. During this time, again, I want to get back to thanking you, the entrepreneur. This is a time of uncertainty, and I know that there's a whole lot of things that you just don't know what's going on. Find a way to dig deep and to show the grit that I know that every single entrepreneur has out there, and to be able to work on your business, to be able to improve your business. And as you're going through this, there's probably a lot of questions about this program. I'd be more than happy to connect with you. I'd be more than happy to tell you everything that I know. But this program is administered by the SBA, so kind of take that with a grain of salt. But until next time, this is Greg Martin, the Entrepreneur's Banker. Hang in there. We're going to get through this together, and I'll catch you on the flip side.